Markets are moving and uncertainty is rising, but with the right strategy, you don't just survive, you thrive. I'm Martin, Chartered Investment Manager, Certified Financial Planner, Registered Retirement Consultant, and today, in this 10-minute video, we're diving into 3 key topics that every investor needs to know. The current state of the market, how we're tackling the challenge ahead, and the portfolio strategies that help you stay calm no matter what the headlines say. Because in investing, knowledge is power, and a steady hand wins the race. So let's get started.
So today's session is going to be called Proving Your Worth. So unless you've been living under a rock, you've seen the news. Trump is talking about all sorts of tariffs against Canada, Mexico, and other countries around the world. There's been a lot of negative news headlines. And so today we're going to talk about how we thrive in that kind of environment. So Harbourfront is based in BC, and our whole marketing idea behind Harbourfront is related to boating. And so tacking is a term used in sailing. I'm not an expert in sailing, but from what I understand, it's when you're changing directions through the wind, through a headwind, so that you can get to where you want to go. And so that's what we're going to talk about today, is how to make adjustments so that you can get to where you want to go, and how we can do that in a more secure way with less volatility. Now, first of all, in terms of market cycles, we know that the markets don't always go up in value. And so we see some volatility. Have a good year, we're happy, we have a couple really good years, we become euphoric. And then, of course, markets go through their cycle and we start to see drops in value. And, as the markets drop and we get to the bottom, by that point, a lot of people are thinking about bailing out. And that's the opposite of what we need to do. We need to buy low and sell high. People inevitably tend to think that they're throwing away good money after bad if they remain invested or if they put money in when markets are low. So what we're trying to do is we're trying to short circuit this cycle in the sense that we can't change the markets, but we can change how our portfolios navigate through these tough markets to make it easier for clients to make the right decision. And so as markets go down, if we're able to provide a better market experience on the downside and help to preserve capital, people are less likely to bail out. And therefore, they stay in the market. And as we know, it's time in the market that makes money, not timing. And so if we diversify your portfolio, that is one thing that we can do to help shield you from market volatility. But it's not just diversification with stocks and bonds. In fact, we need to add private investments. So that includes private debt, private real estate, private equity, and private infrastructure. So when I joined Harbourfront in 2018, I joined Harbourfront because they had access to private debt. And my fear was that there was going to be an interest rate crisis. It did materialize, just not in 2018. I was ahead of the curve. So as interest rates go up, your bond yields go down. And so I was worried that as interest rates were at the lowest they had been in years, that as interest rates went up, that we would see a drop for bonds, and especially for conservative investors. So conservative investors typically have more bonds in their portfolio, and therefore they would be more subject to a market decrease. So we can see here that private investments, and we'll show how they provide resilience for investors, but they've become more and more popular. Harbourfront is a leader in private investments, and the competition is finally starting to introduce private investing into their portfolios, but they're still lagging way behind, in my opinion. So how can we prove that these private investments are providing that downside resilience? Well, if we do some back testing here, looking historically at data from 2016 to 2023, we can see that a balanced portfolio returned about 8.7% per year gross. And we can see that with private investments, that return jumps up to 9.8% per year. So about 1.1% more per year in return. But what's more important in some cases is that you're achieving that higher return with lower risk numbers. So this is annualized volatility. What you need to know is that the more volatility you have, the worse it is for you. If you can have a high return with zero risk, I think we'd all agree that that's what we want. Now, that doesn't exist, so we have to live with some volatility. But the idea is that if by adding private investments to our portfolio, we can achieve a higher return with less risk or volatility, then that is ideal for our clients. And so that's hypothetical. How about real life? Well, in real life, there are three portfolio types: watermark private portfolios. This is our most popular option for clients. It includes private debt, private real estate. All the private investments are available to our clients in these portfolio series. The Clearwater portfolios are custom portfolios. Unfortunately, not everyone is an accredited investor, and therefore not everyone will be able to add private investments in these portfolios. That's why Watermark is such a popular option. And coming soon, we're going to be launching Prestige Private Wealth portfolios. So these portfolios are managed accounts, just like Watermark. The difference is that Watermark tends to be quite defensive, and Prestige Private Wealth portfolios will be a little bit more offensive, but still using private investments to help attenuate downside risk. Now, so we talked about hypothetically how adding these private investments will help returns, but how has that played out? I mean, it's been since 2018 that these portfolios have been in place. Well, most of them anyway. So let's just look at the balanced portfolio. It's the Watermark Private Portfolio Enhanced Balance Plus. So we can see on this chart here on the y-axis, the higher you go, the higher the return is. So the highest return on this table is this growth portfolio. You can see that. On the x-axis, the further you go to the right, the more the volatility in that portfolio. And so, of course, you want to be as close to here as you can. And so you can see the balanced portfolio compared to the benchmark balanced portfolio. So the benchmark balanced portfolio has a lower return than the Watermark portfolio, and it does so with way more risk, about double the risk of the Enhanced Balance Plus portfolio. Said otherwise, our Watermark Private Portfolio Balanced has done more return with less volatility or less risk. So we can look at this a different way. In fact, if we look at this in terms of performance over time, you can see it. This is the Conservative Plus portfolio. You can see $10,000 of growth over 5 years from November 30th, 2019 to November 30th, 2024. And you can see that this is the COVID crash. So March of 2020. We can see the yellow line or orange line is the conservative benchmark. And you can see the Watermark Conservative Portfolio provided significant downside protection during that crash. And you can also see during the interest rate crisis that happened in 2022, we see significant downside protection in the purple line, which is the Watermark portfolio, compared to its benchmark. Now, it's not just the conservative portfolio that did well, it's also the balanced portfolio. You can see the Watermark Balanced Portfolio also provided significant protection during the COVID crash and also during the interest rate crisis. And finally, you can also see in the Growth Plus portfolio, we see significant downside protection during the COVID crash and also the interest rate crisis. So regardless of your risk tolerance, we've got you covered.
Now, before we wrap up, I want to leave you with 3 key takeaways. First, noise is part of the journey, and you need to tune it out. Market fluctuations will always be there, but it's time in the market that builds wealth, not timing of the market. Second, the key to protecting your money lies in careful integration of private investments. And third, Harbourfront is a leader in private investments, giving you a significant advantage with solutions designed for your benefit. If you think this video might be helpful for someone you know, please feel free to forward it along to them. And if you have any questions about anything we've covered today, I'd love to hear from you. Book an appointment with me by clicking on the link in the description below. From Prestige Private Wealth, thank you for your time. I'm Martin Cloutier.